Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video and let's jazz! Today is June 10th, 2024 and it is a weekly markets update. So let's have a look at the news of the week 23 and see what are the next trends. Clearly, the newsmaker of the week was Egypt, where gas supply cuts to the fertilizers producers resulted in production cuts or full production stoppage, depending on the producer. This news provoked the domino effect, and urea prices surged in all regions across the globe. There were deals conducted in Egypt at $350 FOB price. Algerian producers made sales at $340 and now are targeting $360. Spot sales in Middle East were done around $330 level, also being supported by demand in Australia. Black Sea values increased to $320 FOB, no deals though. NOLA barge levels also increased, especially for July. China is still out of exports market. Rumors circulate that it will not come back until August. However, buyers globally are not really willing to support such high levels. Many buyers stepped out of the market, waiting and closely monitoring the situation in Egypt. After a day of chaos, news started to emerge that gas supply in Egypt will be steadily restored. However, there is still no clarity when production will fully recover. In order to understand the reasons behind this situation and try to forecast its consequences, let's have a closer look at the state of gas market in Egypt. The most important reason is imbalance in the supply and demand of natural gas. Counterbalance of fuel supply has become more and more insecure over past years because national demand increased faster than supply. Egypt produced 59 billion cubic meters of gas in 2023, which is 12% lower versus a year ago. Output from the largest gas field Zohr alarmingly declined. At the same time, domestic consumption is almost at record high levels during last years, which is driven by abnormally high temperatures during summer time, but not only. Egyptian population increases rapidly and reached 106 million people in 2023. Urbanization also increases at a high rate of 2% annually. Obviously, it drives more and more power consumption. Also, Egypt imports gas from Israel since 2018, when two countries closed $15 billion import deal. Last year, Egypt imported about 8.6 billion cubic meters from there. In 2023, Egypt and Israel signed off the deal to increase this volume, which is expected to be implemented in 2026. Only 10% of Israeli gas is used for domestic consumption in Egypt, while 90% is being liquefied and sold as LNG to Europe. Transit of Israeli gas to Europe was seen as one of the sources to strengthen European energy security, especially amid Russian gas supply decrease. However, Israel temporarily closed its gas field Tamar for maintenance on June 5, which is expected to be finished in about a week from now. It is not the first time. Last October, after Hamas attack at Israel, Tamar gas field was also temporarily closed, and gas exports halted for several weeks. And at that point, gas supply to Egyptian fertilizers producers was also cut by 30% for a certain period of time. In 2024, Egypt already stopped LNG exports in April in order to have enough gas for increasing consumption during hot summer months. But it turned out not to be enough. Last year, LNG exports were also stopped during June-September, but it didn't help to avoid power cuts off for people. It came as a shock for Egyptian population, because it was for the first time after decades of a stable power supply. However, extremely hot summer boosted consumption for power generation, and 2024 summer temperatures are expected to be even higher than 2023 ones. So as a result, Egypt plans to issue a buy tender seeking 15 to 20 cargoes of LNG to cover heavy summer demand. The tender is expected in the second half of June or early July to cover demand for the summer season between July and October. There are rumors that announcement is pending an energy minister appointment, as President al-Sisi ordered the Prime Minister to form a new cabinet earlier last week. The imported LNG will be converted to a gaseous state with the help of a floating storage and regasification unit that was loaned by Egyptian government from Höegh LNG Holdings and will be docked at Ain Soha for a period of 1.5 years, starting in June. So Egypt turns from exporter of LNG to importer for the first time since 2018. All this happens on the background of macroeconomic turmoil, which shakes Egyptian economy for several years in a row. Currently, Egypt is facing a number of energy management challenges. Foremost among them is $6 to $7 billion worth of receivables owed to the foreign oil companies responsible for exploring and extracting gas from national fields. From these receivables, the government has only paid around $1.2 billion so far. So all these multiple problems might bring the fertilizers industry of Egypt in the situation when gas supply will continue to be a challenge, at least until October. Thus, current production cut might be not the last one this year. Taking into account that Egyptian monthly urea exports vary between 365 to 390,000 tons, global supply will feel the pressure. Obviously, it will influence prices. Every time when gas supply was cut short for Egyptian producers, market reacted. Current week is not an exception. The only question is if the response from the buyers will support this level and for how long. Paper markets moved up, indicating price level for June between $340 to $360, for July $340 to $355, easing in August at $325, $340. Same for NOLA and the Middle East. Other than urea, CF Industries announced new prices for granular AN in UK and surprisingly higher level versus previous, £320 CPT. It is unusual that prices increase at the season end. This doesn't stimulate summer stocking. But producer seems to be happy with its sales and doesn't need additional push during off-season. On top of that, escalating urea prices leave lower versus previous year's premium for ammonium nitrate, so there is place for price increase. Ammonium sulfate price from China also increased on the basis of growing urea price. On average, the sulfate added $10 per ton. Phosphate prices continue to increase based on firm demand in all key regions and quite tight supply. Domestic demand in China is strong, which limits exports and pushes prices up. Indian elections ended with an unexpected result, and BJP party that held majority in the parliament has lost it. So now we will see the new coalition, and of course significant changes in the cabinet of ministers. One of the important questions that the new minister will need to solve is level of subsidy for DAP that will form the global phosphate market to big extent. So we will track the development closely. Moving to the fundamentals, natural gas price spike caused by Norwegian supply hiccup at the beginning of the week eased close to the week's end, based on the news that supply will resume. In the US, futures surged on Friday based on the expectation of cooling demand increase due to abnormally high temperatures. Also, US gas production is still down versus a year ago, so supply is a bit tighter. Agricultural commodities markets showed significant drop for all key crops. This week, it was the biggest wave of selling in 13 months. On the basis of the news from the US showing better than expected results for wheat, corn and soybean, futures for all three products dropped. The improved outlook for the US crops shifted attention away from concern with wheat in Russia due to frost and drought and soybean losses in Brazil due to floods. This week, June WASDE report will be issued, so the market is awaiting, and we will follow the developments closely. Shipping industry indices increased this week. Prices for containers continue to grow, and seems like it might last even longer than we expected. Rerouting ships from the Red Sea causing a shortage of capacity, growing port congestion, and rising demand have all conspired to cause a spike in spot rates for containers. The Baltic Exchange Dry Index advanced for the fourth consecutive session on Friday, growing in all segments, especially in Panamax segment, based on the sufficient inquiry for both grains and minerals. To sum up, this week events in urea supported the bullish trend, which might stay amid Egyptian gas supply clarity further in the year. However, such significant price increase seems not to be massively supported by buyers, so we will watch the situation further. Urea price surge supported bullish trend also in other segments, including sulfate and even phosphates. The unexpected results of Indian elections bring more questions regarding DAP subsidy in India and, respectively, market trend for the second half year on the table. Crops futures continue decreasing on the basis of stronger results in the US, even despite problems with wheat in Russia and soybean in Brazil. The market eagerly expects the new WASDE report this week. So do we. Thank you for watching. Please subscribe to the channel, put like to this video, and see you soon.